Hey everybody, RJ Baxter here, Fairway Independent Mortgage with your weekly market update. So interesting week this week, a lot of news, a lot of things happening, and mortgage rates, interestingly, ended the week about the same as they were last Friday, despite being much better midweek. So it's interesting because today rates have worsened on the BLM jobs report that came out this morning with an extremely hot job creation number, 304,000 jobs created. But if you look at some of the underlying data, it's not as strong as it seems. For example, the report showed that unemployment ticked up a little further to 4%. It was 3.7% just 2 months ago. So the fact that unemployment is starting to trend the other direction is very interesting for the economy. A lot more happened this week as far as news goes. One thing is we ended January as the best January for the stock market on record since 1987, the best start to the year for the stock market since 1987. So very encouraging. However, there's some things happening that are, that we need to look at a little further. Number one is this shutdown thing. It has not gone away. So they announced this temporary fix to the shutdown on last Friday, and the prediction was that would lead to potentially higher mortgage rates as it instills confidence back in the market. But that didn't happen because this is just a temporary fix, and I think a lot of people looked at this and realized that we may be right back where we started here in a couple weeks when this 3-week temporary fix ends. And there's a lot of talk about potentially the president announcing a state of emergency with the economy and the government shutdown. So we'll see what happens here in a couple weeks, but the markets, as far as mortgage rates are concerned, took this with a grain of salt as far as the temporary fixed. Another thing is that the Fed announcement happened on Wednesday and they did not hike rates. It was kind of expected that they wouldn't necessarily hike rates this time, but it was interesting that Fed Chairman Powell, some of his verbiage that he used, and they said that the Fed is in a sort of wait and see mode right now, to wait and see what's going to happen. So this is a little bit of a change in the language that they had in the last meeting, and it's interesting that they're just going to wait and see what happens here moving forward in 2019 before they decide if they're going to hike further. So the bond markets, the mortgage bond markets, loved this, and this is part of why rates improved on Wednesday and Thursday. So that happened on Wednesday. Another thing that happened this week is housing data came out and was once again still strong. And I think part of this is that we're still seeing a ton of demand and not enough supply in housing in most markets. So as long as demand exceeds supply, the housing market is likely to remain strong. So that's what's been happening this week for your market update. Give me a call if you have any questions or need help with a mortgage. And once again, my name is RJ Baxter, Fairway Independent Mortgage. You guys have a great rest of your day.